Porter, great to meet you. Thank you for doing this.
Man, it's really my pleasure to meet you, Michael. It's impressive what you've built with this podcast.
Thank you so much. I want to start off with a quote, a great quote by you, and I wrote it down to make sure I didn't screw it up. Sometimes wrong, but never in doubt.
Well, that's the key to anyone who's anyone in the newsletter business. I'm really proud of my long-term record as an investor, but as a newsletter publisher, if you're not willing to get out there and be the guy shouting, you're not going to sell any subscriptions. So you've got to be out there and you've got to be willing to push a view and you've got to be willing to stand behind it if you're going to get anyone to come and look at what you're writing. Because if you just sound like everybody else, we have a very consistent history of good conservative investments. You're not going to get any subscribers. So yeah, I try to take on important views and I try to be very exponentially firm about how I view them.
Have you always been that way?
I would just say that I lack any kind of natural filter. Like my mother likes to say, I've never understood the luxury of an unexpressed thought.
Does that come from her?
Definitely comes from the Irish side, yes.
Because so many people, they hesitate. And I'll admit, I'm one of those people that kind of waffles back and forth and cast doubt sometimes in my decisions. And so when I heard you say that, I was like, wow, that really, I need to apply that more to myself. And so I'm just wondering if that's a skill that you built or was that something naturally inside of you?
I'll say this, my 14-year-old son has this too. I have a uniquely intuitive view of the world, and I don't actually know where it comes from. And that sounds like I'm bragging, but I'm really not. I've just always been able, for some reason, to make an intuitive leap when handed a set of facts that other people, for some other reason, are not able or willing to make. And the best way I can describe it for you is, when I was doing my research into General Motors, this is back in 2005, and at the time I had a business of recommending investment research for short selling candidates. Now I haven't done that in a long time because, as you probably know, short selling is just a very hard game to win. You have to pay to borrow the capital, and because of inflation, generally speaking, nominal prices rise. It's a very hard way to make a living, and I just moved away from it because there's just easier and better things to do with my time. But back then, and between 1999 and 2009, I did it quite a bit as a hedge. And my favorite situation was a very large business, because those businesses aren't very volatile, where the balance sheet meant that ultimately there was no way I could lose as a short. In other words, the balance sheet is so encumbered, even if the management team executes incredibly well, they're never going to escape the debt load. It's just gravity. It's eventually going to crash. And so when I looked at General Motors, I found that in 19 of the past 20 years, and this was in 2005, in 19 of the past 20 years, they hadn't made enough money selling cars to even pay the interest on their obligations. And I'm not talking about, making what were really desperately needed acquisitions, capital for acquisitions. I'm not talking about making desperately needed improvements in property and plant and big CapEx. I'm talking about they couldn't make enough money just selling cars to pay their interest. So there was no question as soon as 2005, in my mind, the company was going to go bankrupt. It was already really bankrupt. It just wasn't insolvent yet. There was no one else. If you go back and look at 2005, there was no one else in the world that was explaining why General Motors bankruptcy was absolutely inevitable. And of course, it didn't happen until the end of 2008, but it was sitting there. It was going to happen. And so for me, I've always been able to just accept the facts as I find them and not really put too much more behind it. I can't tell you why nobody else saw that. I can't tell you why nobody else. It was in black and white that Fannie Mae and Freddie Mac had $250 billion worth of subprime mortgages. They're not going to get out alive. And today, I've been warning very explicitly for probably a year now that with equity prices where they are, with a CAPE ratio in excess of 30, that I don't know what the pen is going to be, but within 12 or 36 months, stock prices are going to get completely hammered. To me, these things are very black and white. They're very fact-based. And so I don't shy away from saying it exactly as I see it. And a lot of times people will criticize me, but you'll notice they criticize the tone or they criticize the messenger, but they don't attack my facts because the facts are just very clear.
There's a reason why the world's best informed investors read my daily journal. Subscribe for free at portersjournal.com.